Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Thursday, the 1st of September. Well, you know, August happened to be the worst month in a decade in the stock market. You know, there's also an old adage on Wall Street, it's a sell in May and go away. Well, that proved to be very true this year. So what about this month, September? And then what's going to happen in October? September and October are perhaps the two most treacherous and difficult months of the year in the stock market. Stocks generally do not do well during these 2 months. So what's ahead? Well, our trade triangles still tell us what to do no matter what happens to the economy. It doesn't matter how many jobs we create or lose, we will know what to do. We will know because we have the MarketClub trade triangle technology on our side. Knowing what to do in the market through our trade triangle signals can make a huge difference to you. Here are just two reasons. One, it will relieve your stress level in trading, and two, it will most likely add to the bottom line, which is also very important in trading. Okay, let's go to the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. So here we are at my home page. I'm going to go to my portfolio, and as you can see, the date it's clearly marked. It's the 1st of September. It's 12:35 Eastern Standard Time, and we're going to go right to my home page. And here it is, and we have the update, and we're going to be looking at the first market, which is the S&P 500, which I think we've all looked at before. Very, very interesting action in this market today. I'm going to put my telestrator on to show you what I'm talking about. First of all, we talked about this level before, which was the 1230 level, which is right around here. Okay, the market tested it today, failed. I would say if we close low, it looks like we're just beginning to roll over, much like we rolled over here in another 3 days together like that. So I think we're in the same pattern, and I think we're going to push this market down lower. The major trend in our trade triangles remains negative. Only the weekly intermediate trend and the short-term trend are positive right now. So the longer-term one's the one you want to look at, because look at the moves. Here's the original signal right here, and it's at 1,258. That was either to get out of the market or get short. The market's trading at 1,218, so 40 points. Yes, I know the market's come up, but the reality is the trend isn't over with yet. We can see this market still trend lower. It's going to be very important to see how we close this market tomorrow, Friday. As you know, it's one of the things we like to look at very closely every Friday. And we closed last Friday right at these levels here. So if we close below this level here, which would be probably the 1180 area, I would say it would be pretty negative for the coming week. But we'll see what happens. But generally speaking, the trends, this market looks like it's beginning to just roll over. So we'll have to give it some more time. But let me clear the screen and go to our next market. And the next market we'll be looking at is, of course, silver. We always look at that market. And we will go to silver right now. And here we have the silver market. And it's showing up. And you can see we've had a couple of what I consider to be very sort of like ushy days. You know, we haven't gone up, we haven't gone down, sort of ushy days. For the last 8 days, we've sort of gone sideways. The market that was very, very oversold or overbought one time has now corrected. It's in the mid-range. Really nothing going on. There's no strong trend either up or down at the moment. And I think my gut feeling is with our trade triangles, which are here, I'll pull them over so you can see them better, are all positive. So it means the trend is still in a positive mode. You want to be approaching this market from the long side, both short-term, long-term, and intermediate term. So we are long from the 1874 level, which we continue to repeat. The last signal is 42.20. This market's traded at 41.59, so you can get in a little better price than the last signal. And I think, again, I think the market, if we see the stock market going down, which we expect will happen, I think we'll see the silver market and our next market go higher. So let's take everything off the screen. Go to our next market, and that's going to be, just give me 1 second. The next market is gold, obviously, and here we are with the gold market. I'll move this out of the way so you can see the trade triangles. Everything's positive there. We're sort of going sideways again for the last 8 days. And I want to just draw something on here on the telestrator just to show you what I mean. And this is what I think is happening. And we've got this is kind of like a line of resistance right here around the 1850 level. And certainly that's the type of pattern we're seeing. So the market isn't overbought, isn't oversold, it's in the mid-range. But certainly with the monthly, weekly, and daily all positive, it means the trend, the major trend, is up for gold. And it has been since $1,430 ago. So you can see that's over $400 ago, and I think the market is still going to see this market continue to improve. But obviously you trade these markets with close stops, money management stops. We've got some very volatile markets, and you have to be aware of that. So let's see how September proves to be a good market for gold. Last month, August, gold up $200. Obviously a big move. So let's clear the screen again, go to our next market. Some interesting markets. I'm saying the markets this is going to be a very, very interesting month in my opinion. And let's go to our next market, and that's going to be crude oil. If you remember crude oil, we were talking about crude oil being at the top of its range. It certainly is getting there. We've got a mixed picture if you look at this overall. And you're also, let me go put my telestrator on. Let me push this down a little bit further. Two things I've noticed here that I want to show to you and share with you is, one, we're at the top of the channel right here. We're also very, very overbought. Not to say it can't go higher, but the market has a tendency to fluctuate. Our longer term indicator, the monthly, is still negative on this market, but our weekly and daily are mixed, indicating that they think the trend is going to be going higher, and it has. If you look at this point here and the move up, you've gone from approximately 82, 81 up to where we are right now. But this is where I think the market's probably going to run into some resistance. Certainly if we project this low here, I'm doing freehand here. So this was really at one time support, okay? And the interesting thing with support, it turns into resistance on rallies. So I think that's the important thing to look at. That's the important level. I would say that's probably going to come in right around the $90 a barrel level. So let's pay close attention to that and see how we can take some opportunities to make some money on that. But again, it's very overbought. We're at the top of the Donchian channel, and we're getting close to resistance. So I would think the next logical move is going to be a pullback. So we'll see. We'll see how things work out. But let's clear the screen again and go to our next market. And that's going to be the dollar index. Interesting enough, I'm going to put a line chart on this just to show you what we're talking about. And we've talked about this, the 73.50 level again and again and again. And look at how this market continues to rally from this zone. And you just have to go back. We're going back here to early June. And every time we get down to this level, I'm just going to roughly draw this in, it sort of bounces. And as bad as things may be here in the US, maybe they're a lot worse in other countries. We're trading this against a basket of currencies. It's not just against the euro, but a basket of currencies. And obviously the dollar rallied from the 73.50 area to the 74.50 zone, and it looks as though it's, you know, kind of getting close to this upper end of this Donchian channel again, which means with the 65 reading, we're in a trading range. Longer term, we see this market going higher. Intermediate term down, daily up. So it's a very mixed picture right now, and I think you should be trading this with the Donchian channels as well as the Williams percent R. Now if we scroll this down, I'll clear this off the screen, and we scroll this down, you can see that the Williams percent R indicator is getting up to an overbought condition right here, very similar to how it was here and here, here and here. So I'd pay very close attention to, once it spikes over the -20 level, it will be overbought, and I think we can see a pullback from those levels, which will probably coincide with the upper end of the Donchian trading channel. So let's go to our next market, and that next market is going to be the Reuters Jefferies CRB index. Now we talked about this, and we CRB index is the best indicator that anybody has to track inflation, without question. And I think we're getting back. I'm going to put a candlestick chart in. I love candlestick charts. I think if you're not following candlestick charts, you're missing out on one of the really cool features of MarketClub and also charting in general. But here we are. We've made a really great recovery from out of the channel back into the channel. We're to the upper ranges of the channel. And again, longer term, we still have a negative bias. That's based on the trade triangles, not my personal biases. I think inflation is going to come back in this country and really take off. The weekly and daily are positive, so we have a mixed picture. But right now, we're right up against the highs of the Donchian trading channel, and I would not be surprised to see some sort of pullback in this market. But generally speaking, the trend is mixed. You're down. I think we're below the 200-day moving average on this market, but nonetheless, our monthlies are negative. Short-term dailies 336, 342, 336. Okay, so we just put those in, and how you do that, just very simply, boom, shows you the area where you have gotten long, and we can put the daily ones in too. They tend to be very, very. You want to trade. You basically want to trade with the major trends, and when you trade with the major trends and filter out the bad trades, which you can do with MarketClub, you'll find yourself way, way ahead of everybody else. But I'm certainly glad that we got this broadcast. We're still having some technical problems with the Irene storm in our headquarters. There's no telephones, I'm afraid to say, and no internet there for the time being. It's not affecting our service because it's actually in a very secure site next to Google and Microsoft, some of the big players in the industry. So we're confident that's going to continue to work fine, but we are having some technical difficulties at our corporate headquarters. So if you're trying to call us to join MarketClub, and you can get a special report on the perfect portfolio, which we talked about. It's $8.95 for a month, and I think you'll really get a lot out of it. We can give you a lot of educational videos. But if you want personal coaching, which some people do, just go to the blog. There's a link down the bottom of this blog, and you'll find a link to a personal introduction that you may want to try and test and see if it's right for you. Hey, this is Adam Hewison. Thanks for stopping by. Every success, but watch these markets. It's September. Let's make some money in September. I'll see you tomorrow. Same time, same place. Thanks for stopping by.